Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the Two Investment Guys. This week, Kris and I want to turn back to the markets, talk a little bit about some of the things we see going on there. Firstly, when we look at indice returns, we've got the TSX is down about 3% so far this year. On the other hand, the Dow in the US is up about 4%. Turn to London and Paris, they're both up about 1%. Germany is up 9%. Tokyo is up 4% and Hong Kong's up 5%. So it's interesting, Kris, that we've got the TSX as of the major indices that we follow. Anyway, it's the global laggard. When you peel back the layers a little bit in Toronto, it's not so much of a surprise when you consider that about half the index is energy and materials stocks. Clearly out of favor at the moment as cyclical positions. You know, Kris, the market sentiment remains negative and volatility is fairly high. You know, we have the usual culprits at play here. Why don't we just quickly revisit those?
Sure. Well, if we just keep talking about the TSX and the energy and materials, a lot of that, what's driving that is the slowdown that we're seeing in China. That's really been a driver of global commodity prices because of the amount of stuff they use in the world. But we can also turn to the usual culprits and look at Euro. Recently, there was yet another summit, and we had out of that came a plan to put together a longer term plan, 10-year plan that will hopefully help get these countries back on track with their debt situations. But each country then needs to go and run this through Parliament, and there will be obviously some stumbling blocks and some more hurdles to get through. The other factor that's been really pushing markets a little bit lower recently has been the last two U.S. employment reports, which have been much weaker than analyst expectations. And coupled with China slowing and Europe's problems, we've seen the sort of coordinated global slowdown.
Yeah, you know, Kris, on the unemployment report in the U.S., it's interesting that, you know, if the ad was about 80,000 jobs in the month of June, it's not really enough to do anything significant to that high, you know, 8.1% overall unemployment rate. And I think that's the big issue that the market is having with it. It's just not enough to get any traction. You know, as well, the China slowing isn't helping that because they're a big consumer of a lot of this stuff. We also want to talk real quick about earnings. We're coming into another earnings season here. Expectations are pretty low. A lot of the estimates have been lowered. Guidance has been lowered. Having said all of that, that sets a backdrop for an easy surprise on the upside. And I think the market is hoping to grasp onto something like that. But Kris, you know, we wanted to talk a little bit about a balanced approach, you know, in investing right now, because I think it's critical at this stage with all these macro factors at play that people give some consideration to what these balanced funds may mean in their portfolio, both in terms of asset diversification and regional and sector diversification. Why don't we touch on that real quick?
Sure. We've talked a lot about asset allocation, how much bonds or fixed income, how much equities or stocks you should have in the portfolio. And from time to time, they're overweighted or underweighting depending on the various conditions. But most balanced portfolios have been focused somewhat defensively, sort of 50-50, 60-40 split between those asset classes, have been performing reasonably well, delivering, you know, sort of 4 to 6% returns over the last year, which in the context of the broader markets is not a bad relative return.
Right. So these are the kinds of things that we think it's important for you as an investor to consider, in that it's a bit more passive from an approach. It's not a trading type of approach, but what it does is it brings discipline into your portfolio where you have proper asset allocation in there. And we think that the balanced fund returns in terms of their performance is proving that concept.
Absolutely. If you'd like some more information about some of these funds or other ideas we've talked about, give Grant or I a call or contact us at TwoInvestmentGuys.com.
Join us next time. Kris and I are going to continue our discussion around the market dynamics. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.